The outbreak of coronavirus has turned the whole world upside down. The outbreak prompted the president to make a pronouncement that there should be a nationwide lockdown in response to the outbreak. The lockdown did not leave out the colleges. It disrupted the programs in terms of teaching and learning. As a result, the principals of TVET colleges decided to come up with ways and means of supporting the students who are at home. The first broadcast of the lessons happened on the 15th of April 2020. I therefore want to request all the students, all the lecturers to commit themselves to watching these programs because these programs are meant for them. After each and every broadcasting, the lessons are sent to the website of DHET. They are also accessible on the website of the colleges. You don't need data to access that. I therefore want to lastly urge you, our students, our lecturers, to ensure that these programs are making an impact on these students, to prepare them for the examination. There is no more time left in the year 2020. Stay home, stay safe.
Good day, my name is TVET. I'm here at Orbit College. I'll be helping you guys the NATED studies, business, accounting, financial accounting, and 4. On topic 3, our departmental income statement. We have a question here for 23 marks that I will go through with you guys, just to help you get clarity on how this is done. Yeah, our question read as follows. Use the information given below to draw up the departmental trading statement of 9 West stores for the year ended on the 30th of June 2015. The information, 9 West consists of 2 departments, which namely we have cosmetics and jewelry department. So our focus will be focusing on that. The business does not make use of interdepartmental transfer journals. That's what we are told here on this exercise. The following was extracted from the records on the 30th of June 2015. Now, what you guys need to understand, we're preparing the income statement for the year ended. Our financial year end period is on the 30th of June 2015. So we are given the information extracted from their books. So namely, there are 2 departments on this. We have cosmetics and jewelry department. Now, what we see here, we have the sales for our sales for cosmetics is 655,000. Sales for jewelry is 526,000. So before we record, we look if there's any adjustment related to our sales, something like debtors allowances or anything of that sort. Now, anything that might actually have an impact on the total sales for the period. So we know for cosmetics we're sitting at 655,000. Anything that related to that will go through the adjustment and check if there was any sales returns. Now, we find here we have a sales for 655,000, which is what I have right now here. So we'll say this 655,000 less the sales returned of 10,300. Then our sales will be 644,700. So we know that for our cosmetics department, we're sitting at 644,700. Then we'll do the jewelry one. We have the sales for jewelry, which is 526,000. Then we'll say 526,000 minus the sales return of 12,200. Then we sit at 502 and 500 rands. So that's what we have our sales. Then we will say less cost of sales. Now, we less the cost of sales. the note says you take the balance at the beginning, you add the purchases, you will add your custom duties, you'll add if there's any carriages freight or any relages on purchases, you'll have to add that. Then you will less your closing stock. Now, we are told that the trade inventory on the 1st of July, remember our financial period will be running from the 1st of July until the 30th of June 20, from 1st of July 2014 until the 30th of June 2015. Now, it's a period of 12 months. Now, we are told here we have an inventory, which will be our opening inventory, which is 49,200 for cosmetics department. We know that we have 49,200. And then for the jewelry, we're sitting at 89,800. So this is what we're going to do. We need to calculate the cost of sales for these departments. Now, we have our opening stocks. When we move, this is our trading, the opening stocks. We have opening balance of 49,200 for the cosmetics. And then we have the opening for jewelry department of 89,800. Then we go back, we look for any purchases. Now, in this case, we have purchases, the cash and the credit. So we're sitting at cash and credit, we'll add them together. So the purchases for cash, what we bought for cash is 300, if you can see here, it's 312 and 500 rands. So we'll have 312,500 plus the one that we bought for credit, which is 195,000. We'll say that plus 195,000. Then that will give us the total of 507 and 500. When we add the total, the purchases for cash, and then we look for any adjustment related to the purchases. Did we send away or any goods that were returned to suppliers? So we look for the purchases returns. Do we have any purchases returns? Did we return any purchases, or did we transfer any purchases? Now, we seem like there is no purchases return on here. Now, we will have on adjustment number 2, the jewelry valued 12,800 was transferred to cosmetics. Now, we know that there was a jewelry that worth from the jewelry department of 12,800. That will say 12,800. We added, so we'll have to say this add to our purchases. So we know that there was a jewelry from the worth 12,800 which was transferred to the cosmetics department. So this means we will have to add it to our books. And then we look for any other adjustment related to the purchases, any other adjustment. So on adjustment number 5, cosmetics were donated to Mandela Cultural Center, which worth 4,000. No entry has not yet been made. We have the purchases of 312 and 500. So this is the purchases that was bought for cash. Then we have the one for the credit, which is 195,000. Yes, as it is. So it's just 195. So this plus this, plus what we have on adjustment number 2, minus what we donated. So this, plus what we have. Now, we are told that this is what we bought for cash. This is what we bought for credit. This is what we bought for cash. Now, this plus this will say 312,500 plus 195,000. 195,000. So this will give us 507,500. Then we go to our adjustment, which is adjustment 2. The jewelry value 12,800 was transferred to cosmetics department. Now, we already know that from jewelry, there was a transfer of the stock. There was a transfer of a stock which worth 12,800. So, plus the transfer, the stock transferred on adjustment number 2, which is 12,800. So we know that this will say 507 plus the jewelry that was transferred, 12,500. Then that will give us 520,000. For those who want to understand how are we getting to the actual purchases of the stock. Then when we move to our adjustment number 5, we see that the cosmetics were donated to the Mandela Cultural Center worth 4,000. No entry has yet been made according to this adjustment. Then we'll say we less whatever that we donated for 4,000. So minus sub 4,000. So we take whatever that, let me get this clear. The transfer was 12,800, am I correct? 507, no, I don't think my amount is correct here. Let me just redo it. 507, 500 plus 12,800. It's actually 20,300. My mistake. 20,300. It's what we have, the total. Now, 20,300 minus the 4,000 that we donated, we're sitting at the purchases of 516,300 rands. So this is the total purchases that we have. Our total purchases is 516,300. So that is why when you go to my prepared solution, you will see here the purchases. The purchases for this organization was sitting at 516,300. So this is how we arrive at 516,300. Remember, we move to the purchases for the next department, which is our jewelry. So I'm just showing you how this is done. Now, the opening stock for jewelry, remember we are given the opening stock. The opening stock is a trading inventory on the first. For jewelry, we're sitting at the opening stock of 89,800. So you will see it on my prepared solution. Here it's for 1 mark. I'm giving it only 1 mark. That is why I said the total is 23. Now it's 89,800. Now we're moving to the purchases. Let's calculate the purchases for the jewelry department. Now, what we bought for jewelry department, we bought goods for 400,500. We have 400,000, that's where we are for the purchases for cash. This was bought for cash, 400,500. Then we have the goods that we bought for, this is cash, 400,500. Then we have the one that we bought for credit, which is 168,000. 168,000. Then 400,500 plus 168,000. That will give 568,500, if I'm correct. So 400,500 plus 168,000, it's 568,500. Now, this is what we bought, the total purchases, including its cash and credit. And then, remember we transferred. How much did we transfer? We transferred 12,800 worth of goods. Now, we'll say minus 12,000 worth of jewelry was transferred to the cosmetics department. We say minus the transfer that we have made of 12,800, minus that. And then we'll arrive at 555,700 when we take the jewelry out that we transferred to another department. Then we'll arrive there. We have the cash purchases of the stock for 400,500. Then we have the one that we bought for 168,000 for credit. The total gives us 565,500. We less the transfer of the stock to another department. We're sitting with 555,700. Then we look for any other adjustment related to the purchases. When we go to this adjustment, adjustment number 3. Adjustment number 3, it says the owner, R. Naidu, took jewelry for her husband worth 8,500 cost price. Now, we'll take that out. This is drawings actually from the purchases that they bought. So the owner took 8,500 worth of jewelry for the husband. So we'll say this plus this, then that's where we arrive at 500, and on my calculator it gives me 547,200. So this is the total purchases. This is the total purchases for the jewelry department. Now, before we even move further, let me just take you a step back to say, on the sales for jewelry, we know that we have the sales for jewelry is 526,000. So we know this is the sales. We look for anything related to sales, we have the sales return. So it's a sales return, it's 526,000 minus the one that was returned, minus the return 12,200. When we look here, we have 12,200, the returns. This is our returns. This minus 12,200, we're sitting at 513,800. Now, we'll look further if there is anything else related to that. Adjustment number 6, it says, did Cherry a debtor return jewelry? If you can see that. Return jewelry of the value of 11,300. No entry has been made. So we'll say 513,800 minus, we will less the jewelry that was returned by Cherry, our debtor. Less the 11,300. Then we have the total of the sales of 502 and 500. That's what we have. Now, as we were calculating the cost of sales, we'll have the opening balance. We spoke about that, 89,800, plus the purchases that we just calculated on the board, which is, here is our purchases, which is 547,200. Now we look for any carriages. We have the carriages on purchases for both departments. At cosmetics, our carriages are sitting at 33,000. Then we will say on carriages 33. So before that, there's an adjustment. Adjustment number 4. An amount of 1,200 for carriages on purchases is still outstanding for the cosmetics department. Now, this means our carriages on purchases, this 33,000 is not the true reflection. We'll say 33,000 plus the 1.2 that is still not paid. Our carriages will go to 34,200. Now, this is what we have, the carriages. If you look at on my prepared solution, we have 34,000 of the carriages on the carriages on purchases. Now, which is the 33 plus the 1.2 on the adjustment. So this is what we have. We're sitting at 34. Now we go look for the carriages of jewelry department. Now the carriages for jewelry department, they're sitting at 15,000. So no adjustment regarding that. There's no any addition. We take them as they are. then we'll arrive, it's just actually 15,000. Then we look for any custom duties. Do we have any custom duties? Yes, we have a custom duty for cosmetics department, which is 11,500. Then for jewelry department, we're sitting at 7,900. So this is what we're going to have. We go here, this is our carriages, it's prepared. This is how we record the custom duties, 11,500 and 7,900. Then we add all the opening balance, the purchases, we add the carriages, we add the custom duties. Then we arrive at 611,200 for the cosmetics department. Then we will less our closing stock. Now, adjustment number 1, the trade inventory as per inventory records as of the 30th of June, it's sitting as cosmetics. We know that the stock that is remaining in our storage, we have 105,500 worth of stock. So this will be our closing for the cosmetics. And then for the jewelry, it's 82,900. This will be our closing, 82,900. Then we have gross. Now we'll say 611,200 minus 105,500. Then we arrive at 505 and 700. This is the cost of sales. Same thing we do here on jewelry department. We'll say 659,900 minus, you can put this in brackets, minus the closing stock of 82,900. Then we arrive here at 577,000. This is our cost of sales. Now, we know that we have a cost of sales for jewelry at 577,000. Then we have a cost of sales for cosmetics at 505 and 700 rands. Now, we'll say our sales less cost of sales. 644,700 minus 505,700. We arrive at a gross profit of 139,000. Same thing we do for jewelry. 502,500 minus 577,000. We get a gross loss of 74,500. That's how you prepare our departmental income statement. This is how far we went with the gross profit. We know that in the cosmetics, the company was able to make a gross profit of 139,000. Then in jewelry department, the company made loss of 74,500. So this is how you calculate your cost of sales. Now, bear in mind, the carriages can come in any direction. It can be carriages on purchases. It can be relages on purchases. It can be fried on purchases. So, but in most cases, you'll always get one method of transport, how the goods were transferred to the premises. So it's either going to be the normal carriages on purchases, or fried on purchases, or relages on purchases. So this is how we arrive for these 23 marks. This is what was required from us to prepare. So knowing that you take your cost of sales, you less everything that we spoke about, you take your sales, you less your cost of sales, and then you know the cost of sales, those are your opening, your purchases, your carriages, and then your custom duties. So this is how you calculate your cost of sales. Then you less your closing stock. Then you'll get the total amount of 505,700. Then on this side, we got total amount of 577,000. Thank you very much for your time.
My name is Ntombi Njangase. I'm the principal of Umgungundlovu TVET College in KwaZulu-Natal, Pietermaritzburg. The coronavirus epidemic and the lockdown that comes with it has actually put the institutions of learning under unprecedented amounts of pressure. The fact that our students cannot physically go to class to attend lessons means that as management of these institutions, we have to put systems in place to make sure that our young people do not lose the academic year. But on the other hand, whilst we do that, we need to make sure that they do not lose their lives in the process. I therefore wish to encourage our students in TVET colleges in particular to take advantage of the lessons that are offered on television. Some of these lessons are offered on YouTube, but you can also find these lessons when you go into the website of the Department of Higher Education and Training. The lessons that are offered on the website of the Department of Higher Education and Training are offered for free. And the manner in which our lecturers responded to the call of supporting our students is highly commendable. As we are going to return from the lockdown, we are going to pull all stops to make sure that the academic program and the academic year is not lost. Save the academic year, save lives.